Agent Boost. Agent Boost.
Another episode coming at you guys. There's some updates going on in the industry right now. The government is finally back open. So we've been talking a little bit on the past podcasts of when we thought that may happen. And I think it's ended up opening up a little bit earlier than we were expecting, but not really any updates. Apparently,
right.
The D's and the R's didn't really come to much of a consensus on what we're going to do with healthcare. And it seems like the latest was not, are we going to extend any of these subsidies or restore them in any capacity? Of course, Mr. T in the White House decided he was going to float a completely different idea, which is let's just fund the direct healthcare premiums directly. So
my counter to that is, how are we going to ensure that they actually spend the money on that? Because they're not going to. And ultimately what you're going to do is just going to have a round two of, subsidies from the C era. And it's going to go back to just increasing inflation. But, that's a discussion for another day. That's like if we were going to get into like an economics discussion on the podcast, which I try not to go down that road. But yeah, I don't know that that's necessarily the solution either. And just for the record too, going back to the subsidies, just so that everybody is really clear, all that is trying to happen is they're not trying to take away subsidies from the ACA. What they're really trying to do is the Affordable Care Act as we know it, and as it was prior to the COVID era, they're trying to just return the subsidies to that era, right? To where people are still getting subsidies, but there was enhanced dollars and money out there,
post-COVID.
After COVID hit, and those dollars were flowing, and now they're trying to kind of wind it back to the subsidies prior to the COVID era. And that's really what the infighting has been about, in a nutshell. I mean, there's some more complexities, but just the Cliff Notes version, that's what it is. And, like everything I always say with, government, it's pretty hard to go backwards. Once you have a certain tax rate or something, it's hard to wind that backwards.
Yeah, well, people get used to it being that way. And the talking points that emerged, obviously the R's wanted to blame literally everything on Obamacare, and that was why healthcare is so expensive. And it's just hard to talk about anything these days, self-censoring, but
we might just have to do a different one that's on X or something.
Yeah, and anyways, all of a sudden the started talking about
R's.
Yeah, well, the R team started talking about how healthcare had exploded and started vilifying all of the health insurance companies. They became public enemy number one, and we're talking about how their stock prices have gone up so much since Obamacare. And a couple of interesting counterpoints. If you go back,
also think about counterpoint to that too. If you look at all the other stocks of like blue chip companies and companies doing that much with GDP and everything else, and how much they've grown, and the other subsidies and look at other sectors and industries, and actually healthcare is an extreme laggard compared to other industries.
You go look at literally any sector. I thought it was such a stupid comparison of, well, look how much their market cap's increased since 2011, since 2012. It's like, go look at literally any other sector. Go look at the tech stocks. Go look at the banking stocks.
Go look at utilities.
Go look at anything. Yeah. And the hockey stick increase in valuations has been just the same proportionately, and
or significantly more.
One of the things that really frustrated me about this whole recent government shutdown is it just goes to show how, I don't want to say stupid, but how ill-informed both politicians are on both sides about some of these topics. And, they start talking about it. You have these figureheads emerging on both sides that start talking, and you very quickly realize, if you know anything in the industry, that they absolutely have no idea what they're talking about. They're out of their depth. They don't have any nuance of what's going on. They both just have their talking points where they're trying to score points on both sides. Obviously the R is trying to blame the ACA because it wasn't their idea, but yet they love Medicare Advantage. It's just, you start getting into the nuts and bolts of the politics of it, and just it all falls apart, and it gets so annoying to me.
Yep. And ultimately, we talk about it a lot, and sadly, the people who are suffering amongst all the infighting and everything else are typically the losers are the consumers and the agents and distribution and everybody. But ultimately, you think about the consumers when it's been so complex. If you've actually been following things over the last few months, right? If you're a broker in the industry and you're an agent and you've been trying to figure out these carriers are going to file plans, and they're going to file in some states, they're going to allow multiple filings, one with enhanced subsidies, one without. What am I going to tell my clients? Okay, we're not going to be doing silver loading anymore. I'm probably going to have to move my clients to a bronze plan with an HSA. Okay, what's my strategy? What's my plan? How am I going to help them? Okay, this is required, not required. There's so many moving parts. It's hard to keep track of as a broker. And if you think of a consumer on the other end and being like, what the hell? I just want health insurance, and I don't want to get stuck with medical bills. And when I go to a doctor or a hospital, I want to have coverage for my family. How the hell do I do this?
Yep.
It's it has become maybe peak the most confusing and challenging marketplace of a product to navigate in maybe the history of the world. I don't know. I've never thought of a more difficult product or something to go buy if you're a consumer in trying to navigate what has happened over the last 6 months. And then you kind of go in all of it, which I feel fortunate about. I always say that we love our industry. I love what I do. But you go, that's the value of a broker. And you have to think about the time, the hours, the education, and all the work that they're having to do to really be very knowledgeable and be a resource to a consumer. They're more valuable than ever. And at the same time, they're kind of getting vilified and kind of poo-pooed at the same time.
Exactly. A couple points there. There's more confusion out in the industry than there's ever been before. We've been in the industry for about 20 years now, and the average consumer is so confused, their head is just spinning. We reference this Facebook group that we have tens of thousands of consumers in, and the way that these consumers conflate these different issues and products in their mind and the problems, people complaining about, the reason why my Part D is more expensive this year is because the premiums or the subsidies are expired, or the R's don't want to fund this thing. And I'm going, man, the average consumer out there that's on Medicare or ACA or just health insurance can't make heads or tails of any of this. And to Dan's point, and we always lament that a lot of times we're talking about negative changes in the industry, and that we come and kind of be the bearer of bad news and talk about nothing but problems. But I would say we are up substantially as a company as far as enrollments this year. We've grown even more so than our past two annual enrollments. And what that proves, and what I've been telling agents all over, is there's never been more of a need for you. There's never been more talking points. There's never been more confusion. And, to reiterate your point, the value of a good broker is very important right now. And if you are an insurance agent out there, a good one, this should be your opportunity to shine both on the ACA side and the Medicare side of things.
Yep. Agreed. So that's been chaotic. And to your just to follow up to that, yes. For example, we were going through, and I don't know if we want to start talking about roadmap stuff yet, or when we get into that, but I was just looking at numbers, and people probably know us, or at least the listeners and people who subscribe to the podcast will probably know us more. I would say that I tend to be a little bit more analytical, and operationally focused sometimes than you are. Not to say that you can't, or it's not your strength, but you're definitely more sales motivation. I'm more, sometimes back of the house and operationally focused, and was just diving into the numbers on, what we were doing. And yeah, we grew even from a 2024 to 2025. I think our ACA block of business, literally 4x'd, for what we actually did. It had that much of an increase. So we're growing substantially. I think our Medicare overall new sales went up over 40% from where it was year over year. So, when we start to really analyze and dive into the numbers, industries aren't really growing very much, right? Like the head counts aren't growing. The ACA numbers and people who are insured isn't growing. The Medicare marketplace, if you look at like Medicare Advantage penetration and stuff, they're not really growing. But we're as a company having substantial growth in an industry that's not really growing. And I do attribute that more to understanding what's really happening and having a strategy to grow in that environment.
Yeah, I think we should probably spend the whole back half of the podcast talking about that and the growth and compression and where we're at as an industry and the future. Before we kind of move on from the government reopening, and I think people are on people's mind with what would happen if Mr. T's proposal of giving money to the people, because the way I'd heard it was floated was it would go through HSAs or FSAs, which of course has been a thing that the R's and Mr. T has championed. But then who does that, you know?
So you mean banks are going to get a bunch of money you just held in deposits? Huh.
Exactly. Okay. And so it's just, you move the cheese, right, of who you're going to vilify the health insurers, and then you're going to reward the banking system that's going to just take the money over there, and then all that's going to flow back into the healthcare system anyway through the HSAs. Oh, and by the way, who are some of the larger HSAs out there? Well, like Optum Bank and stuff like that. And it's just, you know, you're scoring points, but it doesn't necessarily, again, you don't maybe have the downstream information of all of the effects that you're going to have on that industry. But I just like to address that because I think that's a question that I'm getting all the time is.
Yeah. And I would also add to it, like we have probably even in certain episodes, we talk about the political spectrum of the industry. And look, we have ongoing discussions. We talk to partners, we talk to carriers, we talk to agents. One of the things that we really strive to do in the podcast is be pretty like fair and balanced. Like we want to have a discussion about things regardless of, you know, administration or regime or whether we agree with something or don't agree with something. Like we want to be able to kind of just present the factual information, educate listeners. That's what our objective is. And I think that we've spent probably 10 minutes on this episode, you know, trying to be cautious and discuss that politically, but we really don't want to, we're never trying to like defame one side or the other. But at the same time, I think we want to be fair and we want to call out when we think something is nonsense, when something's not going to work, when, you know, and we're always going to do that regardless of who's around or what. But yeah, we talk about some of these solutions that are being presented right now and who's actually going to benefit from that and who's not. And it's just still very frustrating to be in this scenario.
I think it's important to note, and I think any rational-minded person out there can be objectively critical because both sides of the aisle have not been great on certain things when it comes to healthcare. And the reality of it is we all operate in healthcare, and it's hard to come on this podcast and not talk any politics because they're intrinsically, they're linked so fiercely right now, and they always have been and always will be.
They impact the outcomes.
Exactly. And it's, you know, people care about their health and wealth. It's always going to be the number one and number two topics that affect people in the country. And the reality is, and I spent that whole last episode of the podcast talking about some of the other reasons why healthcare has become so expensive over the past 15, 20 years. And it's not just, you know, evil empire insurance companies want to profiteer off the backs of the American people, right? So I think it is important to acknowledge that for the most part, we in America all are coming to the realization that we're in a difficult situation with our healthcare system, that we spend the most in the developed world per capita by far, and we have the lowest average outcomes. And it affects every sector of the industry of which we operate, you know, on the Medicare side, on the ACA, on Medicaid, and there's just really no way to avoid it. And ultimately, I think it's good to have these type of conversations, and hopefully they're valuable and percolate ideas and changes amongst the industry because we all actually care about it. You know, it's why we're not being critical just to be critical and score political points for some other reason, but we want to hopefully promote ideas and thinking because we know people listen to this podcast from CMS and from the carriers and people who are more important than us that may get some sort of idea that collectively we can have a better health system and going forward in the future. So it's not just complaining for complaint's sake or always calling about the challenges and struggles in the industry, but ultimately it's how do we start fixing some of these things and how do we have a better system going forward?
Yeah. And we also talk off camera about the industry at large. And sometimes I even think to myself, like, boy, do I really even want to get on another week and do 45 minutes and sound very negative about all the bad things that are happening in the industry? No, I really don't. I mean, but again, I think that good, bad, or otherwise, we want to be bringing like the most relevant topics and what's happening. And even if it is bad news, we're going to keep dropping it. We've had a lot more bad news than good news over the last 2 years, I would say. If you're a broker and an agent in the industry or a consumer, it's not been bright and shiny, but we do try to be as optimistic as possible too. Do we want to talk about?
Let's talk about the updates of the DOIs and stuff. Is that?
I was just going to,
because that's kind of been the glimmer of hope. That's been like the little light in the dark for a lot of agents.
Yeah, but we talked about it at length, right? Like a couple weeks ago.
Yeah, and a couple other states, I believe it was Delaware's DOI.
Was it New Hampshire?
New Hampshire's and North Dakota's put out bulletins. They didn't go as strong.
Oklahoma did too.
And so agents are feeling like the tide's turning with the DOI, and that but I haven't seen or heard one thing change. Have you? It's kind of like I think story.
They're gonna like kind of like a fire shot out there. It's kind of like in legal where we joke about I don't know if I want to bring it up, but like, it's like, say you're running another business and you get a cease and desist and you're like, oh, cool, cease and desist. All right, I'm going to crumple this up and throw it in the trash. You know what I mean? It's just kind of like that, right? They put out a bulletin that just doesn't really do much, right? It's just kind of almost like, here's our position.
Yeah.
So I don't think that there's any teeth yet and any next steps yet that we can really speak to. Other than it's almost like they're letting the market know that they're aware and they're watching it and monitoring.
Yeah.
In my opinion, that's like my interpretation of what's going on. And like I said, I also don't know that even if they were to roll forward into actionable steps to these carriers to force them to pay commissions, I don't know if that would be, like we discussed in depth, I don't know that would actually be a good overall long-term outcome, because then it's just going to force more SARs and create more issues the very next year. It's just kicking the can down the road. So, like I said, I think how do I even say this? There's been people in the industry who are kind of like, yeah, we got this done, and you're like, why?
There's no victory laps yet.
Yeah, like first of all, like I don't think it was necessarily any direct efforts from certain people, but also secondarily, I don't think that the bulletins are really solving anything yet. So let's not, to your point, no, let's not cheer and take a victory lap until we know anything.
Yeah, one of the things that I wanted to talk about as you and I prepped for the podcast and chatted, the two words that come to my mind over the past 2 years for insurance industry distribution and health insurance really are compression and contraction. And I really feel like we're experiencing the back half of those two things in the industry. And we've remarked on this podcast before about how when Dr. Oz took office, one of the things that he'd said was there's too many agents in the ecosystem.
Yep.
And where we're at right now, and we're going to get into a little bit of practical and tactical things that you as agency owners or agents out there can do so that you can be one of the ones that are remaining in this career. Because I do feel like the agents who have made it through the last 2 years of this landscape, you're like the grizzled war vets, right? You're the ones that are, I don't know if there's that meme, the like shocked soldier. Maybe we can throw that up, but that's what
I would prefer the Leonardo DiCaprio after you just got done fighting the bear. What was that show?
The Revenant.
That was a good show.
One of my favorite shows.
Revenant. Yeah. Like afterwards, you know what I mean? That's what it feels like more if you're an agent over the last 2 years.
Yeah, but those are the battle hardened veteran agents that are going to be remaining, after this annual enrollment. And I think that those are the agents that we want. Those are the entities that you need to become, because those are the ones that are skilled. Those are the ones that are valuable. And as Dan mentioned a little bit earlier, as Medicare Advantage specifically kind of proliferated all across the country, you needed an army of bodies, right? You needed enrollers on the teledigital front side of things. You needed field agents out there all the way. And then as ACA really started growing and became a new product and then started taking off, and then the prior administration really wanted to expand that, you needed even more bodies, right? And so you had a whole different wave of, I'll use air quotes, agents and agencies coming into the business. And it's been interesting to me to see how many agents and agencies have been in and out of the business within 2 years, just because they never wanted to adapt and do things the right way. They wanted to come in and build, castles on the sand, essentially, so to say, with especially the ACA side of things, and even on the Medicare side with HEAP contracts and you're building sales forces of frankly just enrollers. And now we're seeing just the absolute collapse and the washing out of all of those orgs and agents and entities. And so those people are getting compressed out of the industry.
Well, before we move forward, let's go back a slight bit there. I'll always use analogies about like bandwidth, just because back in the day, for those that didn't know, I used to, sell door to door, Comcast. So, Mike got me the job actually. But used to sell door to door. So we talk about bandwidth, like in the cable industry, and, you can only have so much like data and packets that move along, depending on like your bandwidth. You only have that much capacity, right? And so as you were just talking about these last, 10 years of Medicare and Medicare Advantage growing, and the boomers and the silver tsunami and all the agents and people with longevity in life. So you have like just so many people that they needed increased bandwidth, and they needed the more enrollers and more agents to get to these numbers to be able to achieve helping people with their Medicare plans. And yes, and now we're talking about, we've already mentioned it on the podcast, that we're on the downhill slide of that silver tsunami, that every year for these next few years, there's going to be fewer and fewer people turning 65. And, we're now seeing some data from health and MLRs and things with morbidity, and where we're going to have people dropping off of Medicare, more deaths, fewer people turning 65. And so that pool is going to keep shrinking, right? And so we don't need the bandwidth. That's what we've been talking. We don't need the bandwidth. And that was more in a very unsophisticated way. That was what Dr. Oz was saying. And we keep talking about it frequently. And one of the things that people don't realize, I spend time on calls with carriers quite frequently. And in many years past, and by the way, I'm sure many of my carrier friends are listening to this, right? But I used to get put over the barrel from a lot of carrier friends over the last years, being like, how much business are you writing for us? Like, okay, you're light. You need to increase those numbers. How more? And it was more on sales numbers. And that's been historically the thing. And what this year things have been is like, well, let's not even talk about your sales numbers because you're crushing, like numbers are good. But let's look at your accretion rate. What about your quality, your email capture rate, your utilization on pharmacy, your
misaligned plans.
Yeah.
Plan
alignment and plan selection, and your HMO to PPO ratio. And like there's all these metrics. When I'm getting on calls now with carriers, it's not about hitting a big all-in sales number. It's 22 different like metric points that they're wanting to just adjust, and calibrate, so to speak, the products and where and when and how we're selling. And hey, could you increase any volume here in this state or market just a little bit? Or hey, you're low on these SNP numbers versus PPO or whatever. Those are a lot of the conversations. And certainly part of it is also, compliance is also shifting to being this reactive thing that is months later based on like CTM results, to many of the carriers are getting more proactive on the front end, where they're starting to look at trends. And, we are in a challenging position because we're going to a lot of agents trying to do our role as distribution and be in front of it and intervene, correct behaviors with agents and help them. And we're getting a lot of pushback from agents who are kind of like, what the hell, bro? Kind of like, I'm writing 100 apps. Like, what do you care about this? Like, leave me the hell alone. I'm writing you business. And that's kind of the attitude we're getting from, many agents. And we're really saying like, no, you don't get it. Like, I'm not going to name it. Carrier X doesn't care about you writing them 100 apps, because if you're gone, it's a vacuum. Somebody else is just going to write that business anyway. They don't need you. You don't understand that, like, you are expendable. I'm expendable. If we're doing a bad job at Agent Boost and we're out of the industry, it's a vacuum. Somebody else is going to absorb it, right? And you as an agent, same thing, are expendable to them. And so I think that's one of the components that people need to really wrap their heads around right now, is that, like in any industry, we have a supplier-vendor relationship. The carrier's the supplier, we're the vendor, and we in turn, the agents are vendors too. And like if I hire a vendor for a wedding and they suck, you fire the vendor and get a different vendor. You hire a subcontractor to lay tile on your house and they do a crappy job, you fire them and you hire somebody else new, right? Like that's how it works in a supply chain, in an industry, and in a business. And the insurance companies are now saying, like, look, just because you went out and got your license doesn't entitle you to an appointment with us. Like we're not obligated and required to give you an appointment. We can, and here's a contract and you can go sell for us, but we don't have to. And they're also starting to kind of scrutinize the vendors and the agents who are performing service and saying, we're going to raise the bar and have a higher quality standard. And now we don't need 13,000 agents, or in this case, some of them 300,000 agents selling for us. We actually only need 120,000 agents. So we're going to shrink the pool of our vendors that we're using to a smaller pool, and it's going to be agents who are doing a really good quality job. That is where the industry is starting to go to, and I'm just telling everybody now that we're already seeing kind of the steps put in place from carriers.
Yeah, so. I think the epiphanies for me over the past year with the contraction and compression going on is going to lead to another C word, which is consolidation, right? And that's what
I always say, the C word. What was it? Yeah.
I don't know. I don't know what C word you're talking about. Consolidation is what I'm talking about. And I think right now for agents, it's more important than ever for you to make sure that you're with an org that's properly aligned, right? Because we have seen the collapse of the call center industry, basically. It's...
And I think one thing that's important there to talk about, Mike, before I forget my train of thought, so I apologize for interrupting, is there was a lot of orgs too, like you're talking, we have legacy organizations who have been around for a long time.
That was my second thing.
All right.
So we're on the same page.
All right, go ahead.
Those were my two orgs where we're seeing a lot of consolidation right now happening. And so I think that's why my point is going to be to make sure that you're with an entity that's faring these changes and moving and growing, right? Because that's not how everybody is, right? I'll be honest, it was probably pretty easy over the past 10 or 15 years for a lot of FMOs to grow, because it was just like more. You honestly, kind of like a field agent, you didn't have to be that good sometimes, or a telesales agent, you didn't have to be that savvy or sophisticated, because you just had so much thrown at you.
Ouch,
and there was
you offended me.
Yeah, well, no. What I'm saying is, we know, right? Because there's been so many of these people out in the ecosystem, and now those are the people, easy come. They're having the selection process where it's harder for them to grow and survive right now. And, we've seen the consolidation of the call center industry, because like we've been talking about, yeah, we want to have less compliance, but there's less people aging into Medicare. And the more sales mouths you have to feed, so to say, in the ecosystem, and the more agents out there, the more you need to have activity to churn, and everybody's got to try to get theirs, right? We're not in that land grab area anymore, that land grab era of the industry. We're in the optimization of the distribution, right? And so that's why we're seeing the big call centers be a shell of their former selves, if not non-existent. That's why we're seeing all of these, I'll call them micro call centers or smaller sub-agencies that have just gone by the wayside, right? We saw the proliferation of all these call centers spin up over the past 2 or 3 years with HEAP contracts on Medicare and things like that. And you had, we've talked about them a lot of times, the sales bros coming in that weren't insurance agents, that were just enrollers. Yep. And you're seeing almost a complete killing off of those industries right now.
Well, let's dive in there a little bit, because it's where the industry is going to go. A few things to just kind of like follow up on there. We are in the process of, for example, and if you're listening and you're an agent, whether you're my agent, you're somebody else's, you need to be having good accretion or effectuation rates, because different carriers have different standards. But I can tell you, one carrier, we have an overall company effectuation rate of like 90 to 93%. And others were down in probably the high 70s with like bad carriers. And these are carriers where we don't have much visibility. There's product challenges. There's
slow to get the cards out, slow to process the enrollments, network issues.
Exactly. There's a lot of issues, but you as an agent need to have a high accretion rate. You need to have a very good rate of what percentage of your members don't rapid disenroll, right? Within the first 93, we say 93 days around here, within those first couple months. And then you also have to have a low CTM rate, like what percentage of CTMs per 100 apps that you write. You have to have a good CTM rate, good effectuation, good rapid rates. And, those are the things that carriers are looking at.
So what you're saying is you have to write good quality, actual real business.
Yes. If you are still one of those agents calling to say like, hey, I'm just calling to update your benefits for the next year, we don't need you. Okay.
So, or if you're one of the agents calling and saying, yeah, we're just trying to update your card for the next year. Could you just verify that? Oh, read your Medicare. We're going to send you the new card in the mail.
Oh yeah. Yours is the 2025 card.
Yeah,
you need your 2026.
If you're one of those, jog on.
So those people are getting weeded out and eliminated, because again, the carriers are not waiting for the months later to get your CTMs, which inevitably you're going to get anyway. But they're just kind of seeing the trends and they're starting to eliminate them. But the other thing I wanted to talk about was so there's our industry, but there's also the whole economy right now, and the labor market. And again, I like to be really fair and balanced. Like, our economy is not in great shape. Like, look, whoever's in office, an R or a D or whatever regime, everybody's going to always fudge and skew the unemployment numbers, the economy, how wonderful things are, right? The inflation rate, and they tried, but they don't include in the inflation rate like many other things. It doesn't matter who's in office, right? And right now, I can tell you, it's not good, regardless of what people are saying, because we've already had more layoffs this year than we did in 2008. So when you think about like the 2008, like the bubble that burst, and and how challenging that was financially, we've had more layoffs this year. And I can even tell you, like one of the big e-tele brokers, even a few weeks ago, laid off hundreds of their agents in the middle of AEP.
And most of their staff.
Yeah.
So,
and
skeleton crew.
And I am just telling you that here in a few weeks, as soon as AEP is over, there's going to be more mass layoffs by a lot of people in our industry. And that's because we have industry challenges and pressures, but we have overall economic challenges too. And so we're going to see that. And so what I'm also telling you is, going back to your point about these very legacy telebroker shops, there are so many very complex inputs that you have to go through as a business owner when you're looking at supply, demand, labor, things that are not within our control. Because we can't control sometimes our partners as like a vendor and the supplier. If the supplier, AKA the insurance carriers, are having financial challenges, we don't always anticipate what they're going to do. And so there's going to be times in which, as the vendor, whether you're an e-telebroker or an FMO, you have to stay very much in tune and be very conservative financially, because if you're not, you will get ahead of your skis, just like carriers do with their bids. And some of these e-telebrokers did that. They were so aggressively growing and spending capital to bring on more reps and write more business that, for a lot of years, we'll call it from 2020 to 2024, carriers were showering big telesale shops too with like co-op money or other funds, right? And so if these big shops were off at all on their forecasts, their projections, maybe their media spend was high, their technology costs were higher than they thought, their acquisition costs were a little bit high, they could solve a lot of their financial woes with the millions of dollars they were getting in just co-op money. And now that has shut off, there's no room for error. And so they're having to make really, really tough decisions with going back to this compression and, really where the industry is at. And so I'm saying all this in a very boring way. I'm sorry I'm boring everybody to death, but it's important to understand that people who are doing like W-2 work in telesales shops, there's not 20 big e-tele shops that pay you a base salary with benefits, with paid PTO to work from home, with vacation and all the benefits that you want, where you're going to go make $150,000 a year to $200,000. Those jobs are out there, but they're limited. They're harder to get. They don't exist like they did 5 and 10 years ago. And so as those orgs are bigger too, you have bigger costs. Like as a large employer, you get past 50 employees, you have to provide group health insurance, right? So that increases your overhead cost. If you're a big company, you have office rents, you have staff,
administration,
you have like all these things where as a larger company, you have more overhead. And so going back to compression and all that, it's impacting these really large orgs. And then what is happening and what we're seeing, to Mike's point, is we're seeing a lot of these shady, I don't know if they intentionally try to be shady necessarily, but you're seeing all these very small strip mall spinoffs starting to happen. Okay. And so we've already seen it over this last year where, maybe the big e-telebrokers aren't hiring at the scale that they were, but there's a huge supply out there of brokers who have done telesales work, and they all want to keep doing telesales work and in a heap fashion and whatever else. And so then you got Johnny Bobson, who is working out of whatever state, I always pick on Florida, but whatever,
Fort Lauderdale, Miami,
whatever
Boca.
corner of the country they may be in, who's spinning up a call center shop in a strip mall with low overhead, with no compliance officer, who's running their contracts through an FMO, who's turning a blind eye so they don't have the overhead cost. And they're spinning up these comp models for agents that are just so attractive and awesome. And we're seeing in droves agents who are going to perform work for these small little fly-by-night call centers who don't have the overhead cost, who aren't doing things right, who, surprise, surprise, aren't living up to what they said they would pay the agents, where the agents aren't getting paid right and they're getting screwed, and the agents have very little recourse. And it's this whole little dynamic that has started to be created over the last year or two. And I anticipate that as some of these big legitimate telebrokers continue to have their woes and downsize and disappear, then the workers or the laborers, the agents, are going to keep getting bamboozled into these little fly-by-night call center shops and have very little compliance and oversight. And that's going to be the thing that plays out, I think, over the next 12 to 24 months until they learn the lesson that it's just part of the sector died.
Yeah.
I just have to accept it.
I think with those agents, we call it teledigital agents, right? We don't like to say we have a call center. We've never liked to say that. We have a very big, vibrant, from the time that we created this pre-COVID, the concept was, how do you take a really great field agent and be able to allow them to help people all across the country and really connect them with a great agent, right? That's how we run our model. Every single day of the week, I get on a call with agents or agencies and they're like, yeah, I'm great. I need this. I write 80 sales in a week. And I'll say, oh, so you're not compliant. So you're not doing those in a compliant way. And they're like, what? There's no physical way that you can take the time to do a quality enrollment, a needs analysis, and that would take it, 45 minutes to an hour, sometimes longer if you're doing a good quality job. And so these agents that are bragging, or these agencies that come to me with these crazy numbers, I go, are you intentionally being non-compliant, or do you just not know better?
Right.
Did somebody teach you bad and you have plausible deniability and you just don't realize it? Or are you intentionally screwing us and screwing the industry?
Well, and perspective wise, for people who don't understand that, we have an internal protocol where if an enrollment has a call that lasted less than 30 minutes, it automatically goes to our compliance for review of that phone call to make sure how did they do a good compliant enrollment in less than 30 minutes, right? So we have those protocols in place, and certainly that's not the norm.
Yeah. And I feel like what you're talking about, it's like you lift up the rock and the bugs all scatter. And this is maybe not an analogy of some agents, but some agents it is true. And then the bugs scurry and they go conglomerate under something else. And then you lift up that rock. And then finally they realize that there's nowhere left for them to hide. And I feel like we're in the tail end of that in the industry with these bad agents who have kind of, and agencies.
I think it's a good analogy.
Whoever, your cockroaches.
There's nowhere else to hide.
Who have refused to adapt and be part of the solution rather than continue to be part of the problem.
And before we forget, and it's also good because now some of the carriers, not all of you, but some of the carriers are starting to say like, hey, we want to track like the tail end, the last year or two of your CTMs and your accretion rates and like your performance metrics. And then if you ever leave somewhere and try to re-onboard with another call center or FMO, we're going to refuse to onboard you if your metrics aren't, jiving. So they'll prohibit them from just jumping from one shop to another shop to another shop, which I think is good.
Yeah. And we had a call with one of the carriers today and we were talking about being overly, it's a fine line, right? Because the carriers are being very aggressive, especially if it's telesales right now, as we know. If it's on a virtual enrollment, it is very heavily scrutinized and the guillotine is ready to fall. And we were saying that some of these agents we bring on are actually the other kind that they do want to be good, but they've been taught a really bad way. And there's a little bit of rehab that they have to go through where they think they're a good agent. They think they're doing a good job, but you're actually not.
Where I even tell carriers this, because we have like a viewpoint, like we sit in this very, I think, good position where we're very large to where we produce a lot and have data in all these states, and we do teledigital and we do field. We've got a lot of time and duration in the industry. We've lived through a lot of it. And what we're really seeing is that the very tenured agents who have been around for a long time and are still here have adapted very well, and they typically are very compliant and they're doing a very good job. If you've got an agent who's been producing for 10 years, they're still doing a great job. And then the other thing is we have people who have come in just the last year or two, and they've jumped into the industry in the middle of and they don't know any better, right? So they're like, this is just the way it is, right? So those people have been able to kind of establish themselves in the industry and sell in a challenging environment and do very well because they don't know any better. The agents where I've seen very much problems are the ones who dangerously have been in the industry for about 5 to 7 years. And they kind of got in like right in the time period when, everything was like SSBCI benefits, like right when flex cards and utility cards and everything were starting to pop off and all the sexy benefits, and it was the race to the bottom and everybody's just talking about that and not healthcare.
I worked at Go Health, ReHealth, and wrote 700 during AEP.
Yeah, I think that's, for me, those are the agents, the segment of the agent population that for me is the danger zone because they never had to exist prior to all the sexy benefits and everything was always going to be up and up and up and up and better. And they never had to start talking about like quality and access to care and how
same analogy goes for the ACA agents.
Yeah. And so I think that like as we are looking as like distribution and figuring out like how can we continue to do a great job, provide value to our carriers, the suppliers, those are like we are conscientious about our different agent populations and segments and figuring out like, hey, what do we need to help this agent do or understand or train or do we just need to like move on from these people and just work with these other segments? Because at some point even I'm telling you all, whether it's the carrier or the agency you work with or the FMO, the poop rolls downhill. It just does. It rolls downhill. And at some point, someone is going to make business decisions that they don't want your services if you can't, bring your services up to a standard that the industry demands. Yeah. So.
When we were talking about compression and contraction, and I said consolidation, the second segment is actually in distribution. As we know, we've seen a lot of consolidation happening in the industry through acquisition. And, we've been part of that. We've talked about it on our podcast. We ended up selling the majority to AmeriLife, and that's been a great decision for us. And we made that decision strategically to continue to grow, right? I think that there's been a lot of consolidation that's happened in the industry, and everybody knows who and how and what. And I think we're on the back end of that side of things too, where we're seeing a lot of these builders and innovators and principals that had got into the industry, and they're phasing out. And I think there's a tier of agents and agencies under some of those entities that are going, well, now what do we do, right?
Well,
because
a lot of carriers call that bench, like bench strength.
Yep.
And right, like you think about a sports team, and like you have your starters, and then you have your bench. And what's your bench strength like? Because the starters are out or injured, and you got to have next man up and somebody to keep driving the industry, right?
Well, conversely, I think there's a point of it where the bench team were actually the drivers,
100%,
right?
I agree.
They're the profit centers of those other orgs.
Those other orgs only existed because of how phenomenal those other institutions and organizations
and some of them,
doing.
I don't mind even just saying, some of them were, like I said, they were in the right place, the right time, and they experienced easy growth as the industry proliferated, and they were able to time it right and cash out and get a bag. And so there's a lot of agents and agencies that I'm talking to that are maybe under some of those ecosystems, and you may be feeling that like, hey, I see the consolidation and the compression, but what about me? I've got years to go in this industry. I want a growth path. I want a partner that can help me, navigate some of these nuances and challenges in the industry. And I think that there are a lot of big and mid-size orgs and agents and agencies that are kind of in a dead end path,
stuck?
so to say. Yeah, they're stuck.
Yeah.
They're in hierarchy hell. And I think that as the consolidation continues to happen, that's going to get tighter and more difficult for those people. And I really think that
you're going to see it loosening up and blowing up a little bit. Right?
I do see that. And I see these agents, these particular agents and agencies going, if you don't move, you're going to just die on the vine with some of these other orgs, or you're going to not progress to the point where you're not even going to matter anyway. And so I want to, I guess maybe it's a pitch for some of those people out there to, reach out to us, some of those agents and agencies. But if you feel stuck, make sure that whether it's with us or somebody else, that you're with a partner who's growing.
Don't be hitting that glass ceiling and getting capped out.
Yeah, because we, and human nature, and we talk about this all the time, is people will do more to avoid the pain, any sort of pain, than they will to get the potential upside. And what I've seen is a lot of these agents and agencies know they're stuck in a dead end path, but they just keep waiting for something to change, right? They just keep not moving, and it just gets worse and worse and worse for them.
Do you remember what I told you this week? And I was like, it's just like people with their health, right? Mm-hmm. Like, guess what? Every time I go to the doctor, do you know what they say? You should sleep better, you should eat well, and you should exercise, and you should drink a little less. And you're like, oh, really? I didn't know that. Yeah. Like, oh, surprise. Thanks, doc. I appreciate the advice. Well, it's like we all know that, but most people out there won't make significant life changes until there's a medical event, until they finally hit like rock bottom. They don't fit in their pants or whatever it may be. They've hit something,
a heart attack,
and then they're going to make changes, right? And so I think that that's the same kind of analogy with a lot of people out there in distribution and where they're at. Like they talk themselves out of it, and they're like, "Oh, it's probably fine." But you have agents and agencies and people who they are now either stagnant, not growing for multiple years, or they're declining or diminishing with their businesses because they're not in a position or a place for them to properly grow their business.
Yeah.
And so I think that that's really what we're talking about. And so a lot of those people need to recognize and realize that nothing changes unless it changes, right? Mm-hmm. So
yeah, and I think that there are we know the who's who. We know we can name names and point fingers, and we're not going to do that. But there are very few large orgs, FMOs, entities out there that are growing and navigating the last 2 years very well. I feel like we're one of them. I feel like we do that on both the Medicare and specifically the ACA side as well too, because almost nobody is experiencing growth over the ACA, these big orgs, the ones that became, the champions of the industry and the volume dealers over the past couple of years. It's very interesting to me to see some of those people not even be in the game anymore, right?
Well, and part of it has been also and we're coming up on time, so we can't take too much longer. Part of it has been also that people were so willing to give away all their margin and broker and just at the cost of an app and grow at any cost and grow at anything. And they've been so willing to just broker out their contract to anybody, regardless of whether they deserved a contract level or at a dollar amount or whatever.
Because that was their only value. That was the only thing they could do.
And then they would live on co-op, right? And so that's where their profit or their margin would actually come in, is on the co-op. And so, as soon as that starts to kind of back off, then they don't really have margins and they have business expenses, and then it starts to get ugly, right? So, we could talk more in depth about that. And I do. So maybe for next week or something, we are starting to put, just so everybody knows, kind of speakers and guests lined back up for, later this year and early next year. I know you get sick of hearing from just me and Mike, but anyways, we'll have some other upcoming guests. But I think before that, you'll definitely hear from me more about, roadmap. I did one last year on an episode where we talk about, how we talk about and hash out, every year's roadmap and how we specifically break it down for goals in each division. And, we're very specific about the goals, and then we try to break it down to all the people in our organization so that they understand what they need to do for the company all in to achieve its goals. And it's been really effective.
We should go deep on that, talking about how we do that and the process. I was telling Dan, right now, we're actually bringing on a crazy amount of agents every week right now, because what usually happens is agents, when AEP starts, realize they're not in the ecosystem that they needed to be, or they're not in a position for success, or once again, they're reminded of what they could have done or should have done. And so this is, again, if you're out there, you've got to make a change at some point. And right now is actually a good time as people get into this end of the year mode. And that's what we should talk a lot about, as well. Our industry kind of basically whimpers off and then dies after annual enrollment, and then picks up steam again sometime in January. But that's actually a great time to make a move if things aren't working out for you, is this end of the year, so you can start next year on the correct path.
Yeah, and before we wrap, just already be thinking about, hey, agents out there, the last week of AEP, make sure you're checking with all your enrollments to ensure that your plan is actually going to effectuate. Okay, so again, good practices, please do that last week of AEP. Check in on all your members, okay? Check in with your active book of business. Make sure that you've done everything you need to service and take care of your clients that you need to. Continue to have a plan to work the 8th through the 31st. There's more SARS and disruptions than ever before. 7% of people were impacted last year, over 10% this year. So even a big spike.
10% just lost their plan.
Yeah. So there's a 10% of Medicare Advantage members out there have a SAR. Okay. So think about that as you're thinking about what you're doing. You can sit around licking your wounds and packing it in the 8th through the 31st. You can keep working. Okay. So think about that. And then the last thing that I'll remind you, please, please, please don't do this. I say it every year on the podcast and every training you'll ever hear me on. Don't sit around for 3.5 weeks of January because you worked hard in AEP and you don't show up to work until the 20th of January. You will have already missed 20 days of OEP, which is a very good and productive time of the year. So I am, again, just telling everybody and reminding you, if you want to be a good agent, at least please use those tips and plan on and using those so that you're successful. So
thanks, guys.
Agent